Hey guys, Mike here. So, boy, just got some big earnings just came out, which we're going to hit real quick. And we're going to go into all the economic data, which actually I think is what sent the markets down this morning that we'll get into. Talks about the economy, talks about us, shocker, shocker. And then we'll get into the charts and also what to expect tomorrow. There's a certain phrase I want your opinion on that I think the Fed's going to say. I think it's going to be almost word for word. And then I want to see what you think is going to happen in the comments, okay? I got my opinion. But obviously, AMD came out and they reported earnings, beating expectations on top and bottom line. And of course, then they said, okay, fourth quarter revenue between 5.2 and 5.8. Estimate was, believe it or not, 5.85, right? Fiscal year revenue, 23.2 to 23.8 billion. They were supposed to do around 26 to 26.6, so not even close. So you would think they really crapped the bed on this one and the stock would just be tanking. But nah, it's actually up around between like 1.5% to 2.5%. And after hours, we'll see what they say on the call. Airbnb, we are still traveling. They beat on top and bottom line. Surprisingly, the stock was down 8%, but it has come back to only be down 3.5%. Again, this call starts around 5. I believe AMD does as well. And so we'll see. There was more calls bought on AMD. There was more puts bought on Airbnb. People still betting against us traveling, I guess, or just betting against the company. One of the two. We shall see on that one. So, that's the earnings. So some other earnings came out, which, didn't really do too much because obviously we have the FOMC meeting tomorrow. So I think a lot of people are just kind of neutral right now to wait and see what happens. But we did have the PMI come out, some employment numbers come out, and when it did, I don't think the market liked it too much, to be honest with you. Because basically what it showed was you have U.S. Manufacturing PMI actually rose a little bit here. But the key to take away from this is, and this is the highlights, firms recorded a renewed decline in new orders. Not good, right? Amid greater client hesitancy. No doubt there. Easing supply chain disruption led to the first decrease in backlog, so that's good. So demand conditions were linked by panelists to greater client hesitancy amid market inflation that is. New export orders fell sharply, and the dollar strength and challenging economic conditions across key export markets dampened foreign demand. Rates to input prices and output charge inflation softened again. And then if we just look at it this way, you can see that chart right there, and obviously that doesn't look good, right? It looks like it's trending down on the manufacturing part, as we can see right here. And we take a closer detail, you can pause this and look at this, but we'll just go down to percentage change since the last report. And you can see the manufacturing PMI is down slightly. New orders are up, production's up, employment's up, supply deliveries down, inventories are down, which is actually a good thing. Prices are down, backlog orders are down. These are good things to help supply chains out. New export orders are down, imports are down. And then, of course, services, which affect us the most because we're a 70% service-based economy. You can see much better looking chart. It took a dump, no doubt, in 2021, but it's holding up a lot better than the manufacturing part. And if we go down here, you can see the percentage change yourself. I'm not going to read them all off. The real biggest ones probably new orders are down, employment's up, inventories are down, which is good, prices are down, backlog orders are down. So that's all good. And then when you go to the job openings, and this was probably surprised everybody, it actually posted an increase. Vacancy climbed by 437,000 to 10.7 million. Quits rate held at 2.7%, while a number of hires eased. And so based on this release, that means there are 1.9 job openings for every unemployed worker. And if you look at this chart right here, this is job openings per unemployed worker. Well, you can see where we're at. Pretty far up there. Hasn't really came down much, has it? And I think if you just look at, what do you think the average is here? If we draw a line, I'd say around, 0.75, somewhere roughly in there, is what the average back from 2000 on would be. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so I think that's a great visual of what you see what the Fed's talking about when they say a hot job market. People are like, wow, what is it going to take to get the job market down, right? To cool it off. Nope, more job openings. Here we go. We're still spending, still running the credit cards up, still got jobs, right? Still getting pay increases. And this, of course, whether people like it or not, doesn't help with inflation. That's the way it is. Because if you see all those job openings, people are still competing for those wages. Companies got to go out and offer more money to bring them in, right? And so that, but you also see on the other hand, what do you see in the PMI? You're like, it doesn't look that great, does it? I mean, it's slowing down, right? Especially on the manufacturing side. Inventories are going down, new orders are going down. And so, that, because, everybody can read tea leaves. I mean, at this point in time, you say, there's a good chance we're going to recession, unless for the first time in history, all these indicators are just completely off, which could be. That whole shutting down the world thing could have thrown all these indicators out of whack. Let me know in the comments what you think about that. And I saw, somebody talking about today how unemployment rate, when it's coming down, the stock market's going up, right? But it can also go up when unemployment goes up. And I'm like, well, at this point in time, yeah, I mean, how can we go down any farther? We're at a 50-year low, folks. I mean, 3.5. How can it go any lower? We're normally sitting between 4.5 and 5.5. So yeah, even if it goes from 3.5 to 4.5, I don't see the economy falling off a cliff at that point in time, because, I mean, look at all the jobs. First, you got to get rid of all the openings. And they keep trying to do that. They were making headway, and it's like, oh, wait a minute, there's more job openings? Oh, well, never mind that. So that's where we're on that. And I'm not, again, I'm just putting that out there. I'm not hoping anybody to lose any jobs. But it is what it is. I mean, we're at historic lows here. And, if you look at the chart here, you can just see what's happened in the last couple of days. Still in this channel, but sitting there, I mean, that 3,900 level, man, sitting right up against the 100 EMA right there, right up against that resistance line. We bounced off of it multiple times now. You look in this channel, we tested it Friday, couldn't get it Monday, tested it again right at opening, made it above it, couldn't hold, boom. The data comes out and actually sells it off. And you can see right there, I mean, it came down almost to the penny and bounced off that trend line and just started, just kept hugging it the rest of the day and finally broke through right at the very end. As it's coming up, going into tomorrow. And if we just go back out to the 15-minute, I mean, you can see that 3,900 level, which what everybody's expecting. Bottom line, we break through that. You're looking at 4,100 is going to be what everybody's looking at. And again, it just comes down to everything is coinciding in that. The big gap that we've never filled. And also because you pull up the Fibonacci retracement levels, that's where that golden pocket lands right at it. And so, that's something to look at. Plus, there's a major moving average going to be sitting right there. And so I think that's the big target to look at. Now, what happens after that? Who the heck knows? Now, this, of course, depends on the Fed pivoting language. And that is something I saw today, which this is what I've been talking about, is how it's been changing. What is a Fed pivot? What is a Fed pivot, right? And it's changed 3 times.
Joe, I think this is actually important because the term pivot has been defined 3 separate times by markets. First, it meant rate cuts. Then it meant pauses in rate hikes. And now it means just reducing the rate of increases.
And that's right. I mean, ain't that what you see happening right now? That's exactly what we've been talking about, right? As a group, it just keeps changing, right? We change definitions of recession and everything else. Why not change the definition of what a pivot is? Again, an addict looking for a fix. That's what you're looking at. And I was going to say that I saw this today, and to me, this right here is from Charlie Baleo. Follow him on Twitter there. But this is what I see them saying tomorrow, right? This will be the breaking news, right? Tomorrow's news today, breaking the Fed hikes interest rates for the 6th time this year, 75 BPS, increase to 3.75 to 4. Balance sheet reduction continues. Powell signals more tightening ahead, but a slower pace of additional rate hikes on the table at the December meeting. And the question is, when you see that, I mean, is that dovish? And isn't that what we've all been expecting the whole time anyway? I mean, it's not news, right? That you can't continue to do 75 basis point hikes because they've only done like 10 in history. And we just did, if tomorrow would make 4 in a row. I think that's the correct number. And I mean, it's like, oh, well, they're not going to do 5 or 6 in a row? That's dovish. It's like, no, they're going to continue to increase rates, continue to run the balance sheet off, continue to take liquidity out of the market, right? But again, the market is like, we need something, man. Come on, shoot it in the veins. We need something, a dog in heat. It just, that's what it needs. So let me know in the comments what you think. If you hear that statement, what are your thoughts? Is that dovish? Does the market go up on that? Or do you think the market can continue to trade sideways or sell off more? Or what do you think it's going to do? I'm just curious. Personally, I mean, I'm at this point in time, kind of like 30% rug pull, 70% is going to go higher at this point in time. But, you can't tell how the market's going to react. I know one thing, it's going to be super volatile tomorrow. That's for sure. Let me know in the comments how you're going to be playing it, if you're playing it at all. And of course, looking at what we got, and this, of course, will depend on, I think, Fed rate hikes, how this goes. But earnings, if anybody's going to be watching, obviously you have CVS Health in the morning, Progressive, which has just been killing it this year, Roku, Qualcomm after hours with Etsy. I think those are the three really big ones people are looking at to see if people are still spending, see how the semiconductors are doing, and see how the streaming network's doing. And there's no point in going over economic data because it's all about the Fed tomorrow, right? 2 o'clock. He opens his mouth at 2:30, and we'll see, what pivoting language they have in there, if any, because he already said that statement before, actually, and everybody's already predicted that's what's going to be happening. So, and we know one thing about them, they don't like to surprise the market, and I think that's why they put Fed President Daly out there right for the blackout window to say, hey, yeah, we're probably going to be slowing down rate hikes. I don't believe it. They can't just keep doing 75 basis points. Can you believe that? No. Are you kidding me? That's crazy. And of course, I was probably if they do 4 in a row tomorrow, it's going to be like, holy cow. That's way more aggressive than I ever thought they would be. And so, we'll see what happens. Let me know what you're doing down in the comments. Hit the like, subscribe button. Hit and join for that membership. Listen to the McDonald's combo if you like. I think there's like 4 spots left or something. So until I freeze it out for a while. But anyway, I'll see you guys tomorrow for a really exciting day. And I'm sure there will be some interesting charts. But we'll see. If we're flying to the moon after 2:30, I guess you know what time it is. So have a good one, guys. And I'll see you tomorrow.